Welcome to this deep dive. We got this really interesting article you sent over from the Motley Fool. It's dated April 16th, 2025.
Right.
And the headline, wow, it really jumps out. Investing $5,000 into each of these three stocks during the 2020 crash would have created a portfolio worth $329,000 today.
Yeah, quite a headline.
Yeah.
Makes you stop and think.
It really does. So our goal here, our mission, is to kind of unpack that. What does it tell us about finding opportunities when the market's, well, tanking? We'll look at the specific stocks mentioned.
Exactly. It's a great chance to look back at that moment, April 2020, when things felt pretty bleak, and see why these particular companies did so incredibly well. The ones they picked are Strategy, that used to be MicroStrategy.
Oh, right.
CelsiusHoldings, and Nvidia. So three quite different businesses.
Okay, let's jump right into Strategy then. The article says $5,000 back then, around April 2020, could be worth something like $126,750 now. I mean, that's huge.
Just astronomical growth, yeah.
What was behind that? What was the main thing driving it?
Well, the big story here, the main catalyst for you to understand, is Bitcoin. Strategy basically pivoted to become the biggest corporate owner of Bitcoin out there.
So their stock just followed Bitcoin's price?
Pretty much, yeah. Pretty closely linked. Their fortunes became really tied to crypto.
Okay, and the article makes this comparison, which I found useful. It says if you just put the $5,000 straight into Bitcoin itself back then, it would have grown to maybe $63,000. Still great, but way less than investing in Strategy.
That's a really key point. Investing in the company, in this case, amplified the Bitcoin gains significantly. But, it wasn't a smooth ride. The article talks about massive seven-figure losses along the way.
Right, so huge volatility.
Definitely. It highlights the risk involved. Their core business wasn't really what was driving the stock price anymore. It was this massive bet on Bitcoin.
Which makes it pretty speculative, doesn't it? The article even mentions that their market cap, the company's total value, is over $80 billion now.
Yeah, and suggests maybe the fundamentals, the traditional business metrics, don't quite support that valuation.
So it's kind of a unique case study in how, I guess, a bold crypto strategy during a downturn paid off, but maybe isn't easily replicated or guaranteed for the future.
Precisely. It's a fascinating example, but comes with big warnings about past performance, not predicting future results.
Okay, makes sense. So Strategy is the crypto play story. What about CelsiusHoldings? That one, the article says, turned $5,000 into about $129,400, even slightly more than Strategy.
Yeah, another incredible return. Celsius is in a totally different space. They make energy drinks.
Energy drinks, okay.
But specifically, they focused on the sugar-free, sort of healthier energy drink market. And that sector, well, it really boomed over the last 5 years. They caught that wave perfectly.
Interesting. But wait, the article also says their stock actually dropped over 50% in the last year.
It did, yeah. That's a really important point, too. Even with that phenomenal 5-year run, the last 12 months have been rough for the stock.
Wow. So a reminder that even these massive winners can hit serious turbulence. Any idea why the recent drop?
Well, the article doesn't specify exact reasons for the recent drop. Could be market conditions, maybe competition heating up. But it does mention their strategy going forward. They're planning to buy Alani Nutrition.
Ah, okay. Another player in that sugar-free space.
Exactly. Seems like they're trying to consolidate their position, maybe double down on what worked.
And the underlying business still seems to be growing. Didn't it say sales were up?
Yeah, sales grew 3% last year to $1.4 billion. So there's still growth. Even if the stock price took a hit recently, it suggests there's potential there still.
So Celsius is more of a consumer trend story, riding the wave of demand for certain types of products, even with some recent volatility.
Right. A growth story in a specific expanding market segment.
Okay, third one. Nvidia. Here, the $5,000 investment grew to nearly $73,000. Still fantastic, obviously, but noticeably less than the other two.
Yeah, still a return anyone would be thrilled with, but not quite the explosive numbers of Strategy or Celsius in this specific time frame.
Why the difference, according to the article?
It points to a few things. Maybe potential tariffs affecting the tech sector, some economic uncertainty, possibly signs that the crazy spending on chips might slow down a bit in the near term.
Okay, sort of broader tech industry pressures.
Seems like it. Even a giant like Nvidia isn't totally immune to those kinds of things.
But Nvidia, I mean, they're right at the heart of the AI boom, aren't they? That seems like such a strong long-term driver.
Oh, absolutely. And that's exactly why the article still flags them as potentially a great long-term hold.
Yeah.
Their dominance in AI chips is just undeniable. The demand is huge.
And those financial numbers they mentioned are just staggering. Sales over $130 billion last year, double the year before.
And profits soaring up to, was it $72.9 billion from around $30 billion? I mean, that's hypergrowth. So the takeaway there is, even if things cool off a little short term, their fundamental position in AI is so strong that, well, the article suggests long-term prospects look really good. Any price dips might even be buying opportunities for people looking way down the road.
Right. So Nvidia is the tech giant AI powerhouse story, maybe with more near-term headwinds, but massive long-term potential.
That sums it up well, yeah.
Okay, so pulling it all together, the article's big point is that if you'd put $5,000 in each of these three back in April 2020, so $15,000 total, that portfolio would be worth around $329,000 today.
It's a powerful illustration, isn't it? Investing when sentiment is really low during a crash can lead to these just massive rewards if you pick the right things and hold on.
It really drives home that idea of long-term investing and maybe being a bit contrarian, buying when others are fearful.
Exactly. It's about seeing potential beyond the immediate crisis. These three companies, Strategy with its crypto bet, Celsius riding a consumer wave, Nvidia powering AI, they all capitalized on major shifts, even starting from that low point in 2020.
So the key takeaway for everyone listening is really that potential for significant gains through strategic long-term investing, especially during market uncertainty. These examples really highlight that.
Definitely. And it leaves you with a very interesting question to ponder, doesn't it?
Yeah.
Well, given how unique each of these growth stories was, crypto, energy drinks, AI chips, what other areas, maybe things that seem niche or overlooked today, might hold similar potential? If another big market downturn happens, what underlying trends or technologies could produce the next, unexpected winners like these? Where might those opportunities be hiding?